school run. We've got home pretty early this morning. The traffic was very light, so it's 8:40. We're getting a nice early start to work. We're going to do it a little bit differently this morning. We're going to jump onto the charts. We're going to take a look at some technical analysis, have a look at a few of the basic tools, just Fibonacci and a pattern in there and some trend channels and things like that. So for you guys that are interested in technical analysis, stick around. For the people that aren't so interested in the technical analysis side of things, skip forward to about the 7.5 minute mark in the video. We're going to go through some of the afternoon's activities together. So that's in once we pick up the kids from school, we're going to head out. Young bloke's got taekwondo lessons this evening. We're going to go down to the pool, just chill out for a little while. And then I've got some plans. I haven't told Gab yet, but we're going out to dinner to a new restaurant that we found. It's just a suburb away. So I'm really looking forward to that this evening. It should be a really good night. Alright guys, it's time to wander back inside, jump on the charts and have a look. Alright guys, just want to have a bit of a look at some of these patterns that we emerge. So as you can see here, there's probably not too much to see until you really start digging a bit deeper in the chart. So I'm just going to draw a couple of things on here and we'll just start outlining some of this. Seeing here guys, we've got a bit of a short-term uptrend channel here, so we can see it's on a daily chart. So we've got a phase 1, phase 2, phase 1, phase 2. So we've got 2 touches of a trend line which constitutes a trend line here. And here arguably was a third touch, so we were looking for one of 2 things. So first of all, I guess you're looking for a bounce, so price could have continued up in this direction on the third touch of the trend line, which a lot of people look for in trend trading. But another pattern that I think is even stronger is if, and it doesn't have to be the third touch, it can be the third, fourth, 5th touch, but when price comes through and actually breaks. So this one, in this case, it's been a short-term uptrend and price has broken to the downside. So quite often when we see price break to the downside, the first thing we're looking for is for price in this area to beat the previous fractal low. So it's sort of done. We've got some lows here. If you bring your crosshair up, you can see these lows have come down through here. They've sort of met those areas, so it hasn't been a clear violation of the fractal low, but it's sort of get down into those areas. So the next thing after that is we want to see price come back and then touch the outside of the what was the trend channel up. So that's the break and the retest. All right, so at this stage, we're only really looking at a uptrend channel and then a break. But what I want to do is start talking about overlaying some other instruments in here. So the first thing we'll do is we'll grab a Fibonacci and we'll just go from the fractal high and we'll bring it down to the fractal low. And what you can see guys is price come through, so you get fractal high, fractal low, and then price comes up. So we're looking for reaction around these 50, 61 or 78.6 areas. So we see prices come up, it's touched 61.8 Fibonacci and it's come up, give it a little touch, it's come through and it's retested again, and from there it's taken off. So now we're looking at 2 things. Got a short-term uptrend channel on daily, and then we've got a break of that trend channel. And now we're looking at a Fibonacci retracement into these areas. So that's part of it. So one extra step that I like to take now is there's a pattern in here as well. And quite often, once you get this uptrend channel and the break and then the retest, you can start identifying the pattern. So the pattern is an ABCD pattern. So the way that works, you go from the fractal high to the fractal low, you just measure that in. So when we talk about patterns, we're looking at trading towards targets as opposed to just trading a risk-reward ratio as such. So the ABCD pattern constitutes a phase 1 down, then a retracement into a level, and in this case we're looking for a retracement into the break and the retest of the trend and a Fibonacci retracement. And then if we get price action in this area, which we have on the H4 chart, but I won't drop down there just yet, then the target of the pattern would be the leg in, and wherever it retraces to, you'd expect to find that same push out. So you can clearly see that, guys. So what we've done is we've got price come through down here. Let's run down, create the first leg down, that's 225 pips. It's retraced. And then as we've got a price action, you come back down through here and that's run out. So that's 245 pips, but 225 comfortably. So that's the ABCD pattern playing out in its entirety. So I'll just put on some areas here just so we can have a quick look. Drop that into there. Put that up here. down here, guys. Alright, so just rename that quickly. Give me a sec. You can't rush these things, guys. This is how you're making your money. We want to make sure we do the right amount of analysis. So at the start, what looked like a fairly basic chart. Now you can clearly see, as we've gone in and done a bit more analysis, we've got three things happening now, all of which, as you accumulate, add value to the total trade. So remember, the first thing was, it was the uptrend channel. So phase 1, phase 2, phase 1, phase 2. Initially we were looking for a third touch and moving along, but it didn't. It's broken that pattern and it's come outside, clearly come outside, a couple of closes outside. It's a clear violation of the uptrend channel. So then we're anticipating a retest to the outside of that channel. Okay, so what we do at that weight stage is add weight by dropping in a Fibonacci. So 61.8 is very relevant, one of the strongest Fibonacci retracement levels. So we've got the break and the retracement. Again, I said, and I won't drop down just yet, but there was price action on H4 at this level, which was a good entry. And then that's where the ABCD pattern comes in. So you get the leg in, and the pattern playing out is the same distance to the leg in, should produce the result for the leg out. And it's clearly done that, guys. So what we've got there is a fairly boring chart at the start. And just with a bit of analysis, we've been able to turn that into a fairly lucrative trade. All right, so I can hope you see how that come together, guys. It's three different elements, not a single thing working by itself, three different things working together. And those three different things working together has produced quite a strong outcome, including a target to trade to. So I hope you enjoyed that, guys. This is the sort of trading that I do. And it's a fairly lucrative way to trade, I think. I hope you guys get on board, and I hope you can make it work for yourselves. Thank you.
Alright guys, I hope you got something out of that. So now I've got to put work on pause for a few hours, got to go with the kids, do the afternoon's events, and I'll talk to you guys a little bit later in the day. Okay. Really good.
Why is that gonna go flying?
You can have to.
Yummy. There you go.
Alright guys, we've just gotten home for the evening. I just had a quick look at the charts. I've got a trade on at the moment. It's been going for the last 2 days. It's going quite well. It's sitting currently at 4-1 risk reward, so I'm pretty happy with that. I'm chasing a 7. So the best thing I can do right now is nothing at all. If I get on the charts, I'll overanalyze. I'll probably end up closing it. So for me, the day's done. It's time to go to bed. I'll check the chart in the morning, and hopefully we're sitting at a bit higher than the 4-1 risk reward. We'll see how we go in the morning. I'll talk to you guys next time.